Okay, update on the markets here on February 26th, where we're setting up for big swing lows in all the major indices: S&P 500, the Nasdaq, and the small caps IWM. We'll start with the S&P 500, and so Thursday we had that huge reversal. That was day 22 of the daily cycle, and then we had big follow through on Friday. We even closed above the 10-day moving average, which is very impressive. We did go below the previous cycle low, so we we have that another failed daily cycle. This itself was already a failed daily cycle because it was below this low, and so it's certainly possible that this is our low, right? So like we've had this down move and then this up move, this double top, this down move, this fake out. So like, and that's what you generally see in an ICL. You've got really you really do ratchet down in that lower lows, lower highs fashion that really kind of whipsaws people. And you think about, but 22 would be a very, very early daily cycle low, but price action is price action, right? And if we look at the weekly cycle, this is also very interesting, right? So last week was week 20. We're setting up for a swing low pretty easily. We just need to trade above 43.85. Um, Now, of course, this obviously once upon a time was a swing low as well, right? We had followed through that week, and then we failed, and so any swing low is potentially vulnerable to failure. But we're setting up for, like, if this were a bottom, this is what the early stages of it would look like. All that said, I would be watching for this level, around right around the 4600 level. You can kind of see just structurally if this was going to be, like, if you think about this, right? Like, let's look at this closely, right? That's your low, that's your lower low, that's your lower high, a high that's lower than this one, right? This is your lower low, this low lower than this one. And so you might expect to make a lower high below this high, right? If we are going to continue a move down into a, if the ICL decline is going to continue, we get a bottom, not last week, week 20, but maybe week 23, 24. So we'll have to see, right? Because the daily cycle, we might expect to go at least 30 to 40 days. So that would be another, 10 to 15 trading days, another 2 to 3 sort of calendar weeks. And so the monthly chart is also very important to note that we have the condition of a monthly swing high, right? Or I should say we had the condition. We did go below this low, and then we quickly recovered, so you could argue it even becomes a fake breakdown. And you look at the structure of the chart, this definitely looks like it could be a yearly cycle low like these other ones here, right? Where you've had enough damage. In percentage terms, you definitely dropped quite a bit. Sentiment is really sort of in the crapper. We're still below the 10-month moving average, actually. So you could certainly argue that, the YCL is already in. So this is a really interesting time where I think it pays to be long with, making sure you have the right stop levels and you're paying attention to how the market reacts to certain potential upside resistance levels. And so I'll switch over to IWM really quickly because I think the Qs are in a very, very similar position to the S&P. I think IWM is where it's really different. So for IWM, last week we made a marginal lower low below this swing low that was previously in place, and that would put us on week 31 of the weekly cycle, which is really late, right? And so I would think that at this point, this is more likely to be a weekly cycle low than it's not, but than not, I should say. But at the same time, knowing that the S&P isn't super late, it's interesting. It's hard to imagine that we would have an ICL for IWM if S&P was going to continue to kind of roll over. So this would, sort of suggest that maybe the S&P is, maybe that was, a daily cycle low, which is also an ICL, which is also a YCL. We'll have to see. But if it is that low, if it is the low, then there's a lot of upside to be made. So it pays to have at least a small position, with, again, appropriate stop, and also paying attention to where we are when we like to how we react to those, upside resistance levels. That's potentially where you take profit. And looking at the monthly for IWM, you can see we've just been consolidating for, you know, basically the better part of, it's about to come up on a year now. We had this fake breakout. I'll zoom in. We had this fake breakout in November where it looked like we were going to go. Now it's just ending. Now it's just left behind the long upper wick on the monthly. And this definitely looks like, there's been enough damage for a YCL from this peak down to this drop. You're talking about, what is that? Percentage terms. That's 23%. I mean, that's a lot of damage, percentage wise and chart wise. And you can see we're gonna have an inside month when we have the March candle open most likely. But 209, that's the level to watch. We get above that, and we have a monthly swing low here, and we could be off to the races, which again could be signaling that the S&P is maybe it did bottom. But again, I think I think you still want to be cautious. And this is the picture for the Qs. Very similar picture. Possible daily cycle low on day 22, which was Thursday. Lower than it is officially a failed daily cycle. So again, you're imagining you now have a lower low, this low being lower than this one, and it's like, do we get another lower high and then another lower low? That's always your question. Weekly, very same picture, week 20, and you can see on the monthly, same kind of issue, same kind of, this is definitely a credible yearly cycle low, and in this case, the top actually came in November, so we've been declining for longer. It's been kind of an excruciating decline. I think it looks like we closed below the 10-month moving average last month, so for January. So definitely one of those cases where a lot of damage has already been done, and so you want to be cautiously optimistic when you have a swing low in place, because you could be in for a lot of upside if it is the low. So we'll have to watch these levels very closely.